Hi, and welcome to Dollars and Making Sense, a weekly radio program about finance, money, and investing on Radio Northern Beaches and now broadcast nationally on the Community Radio Network around Australia. I'm your host, Ray Treverson, and I'm from OTG Capital. And today we're welcoming to the microphone Neville Berthasill from the Institute of Financial Professionals Australia, formerly known as Tax and Super Australia. And formerly before that, it was the Taxpayers Association, wasn't it, Neville?
Taxpayers Australia, and then before that, the Taxpayers Association.
So you've had a few name changes, but hey, you've been around for over 100 years, so I guess you're entitled to a few name changes over that time, aren't you?
I think so.
Okay. So Neville, you are the tax manager for IFPA, and I'll use that four-letter acronym, IFPA, rather than saying the institute the entire time. So can you just give the listeners a bit of a view of what you do at IFPA and how your role at IFPA and tax has evolved?
Certainly. So IFPA is a not-for-profit association that supports primarily tax and BAS agents who are sole traders or have small practices and therefore don't have the resources to be able to attend to all their needs of their clients. And we support them with resources. We publish a magazine, we publish a reference book, we have webinars, we have a conference coming up, and various resources like that. We also have a helpline where they can call in and get immediate support if they need.
Now, I recently interviewed your CEO, Pippa McKee, and certainly convergence is a word that's on the tip of her tongue. And with the name change going to the Institute of Financial Professionals Australia, I guess you're trying to broaden your reach now into the advice arena as well, one would be fair to suggest.
That's true. I mean, as you said, we've been in business for over 100 years. We know what we're doing. We've identified that there was a cohort of financial planners who were basically not supported, and we're looking to welcome those into our organisation and looking at synergies between those and our tax advisors going forward.
Now, I have to admit, Neville, whenever I mention tax at a family barbecue or a gathering of friends, I immediately get these rolls of the eyes and the, oh my God, Ray's going to bore us to tears. But look, what we're going to be covering off today, I don't think is very boring at all. We're going to be talking about work from home. Now, there's been some major changes in the tax office advice and the deductions available in the from home arena, haven't there?
That's correct. So, as you said, I think most people are aware of working from home and what that entails. But I think also most people think of it as it started with COVID and it came out of COVID and just people found that they enjoy it and they want to continue doing it.
Funny about that, eh?
Yes, exactly. Up until the 30th of June 2022, the tax office had a concessional treatment available, which was the 80 cents. How many hours do you work from home? By 80 cents, there's your deduction, nice and simple. From the 30th of June that ended. So from the 1st of July until the 16th of February, there was a bit of uncertainty about which way we're going forward. But on the 16th of February, the tax office released their new guidance on it, which provides more options, but also more obligations for those people who were previously using what was called the shortcut method.
So you use that TLA SCM in my notes. I actually had to look it up and went, oh, right, shortcut method. Okay, fair enough. The shortcut didn't work for me first time around, but that's okay. The beauty of a search engine. So I guess one of the things that working from home is no strange item to me. I've actually been working from home since 1998. So I was in the IT game and I started working for American companies back in that era, just as the internet was breaking loose. And working from home for Silicon Valley companies was just the way things were done. And I was on an airplane more often than not. And they figured, why pay for expensive commercial real estate when we don't really need it? And so when COVID came along in 2020 and people went, oh my God, we've got to work from home, not just the fact that I'd been doing it for so long, I'd also been selling the technology around it for eons. And so I must say to people, it's amazing to me because the CEO of Microsoft at the time said within the first 3 months of COVID, they achieved more in technology progress around work from home and remote working than they did in the previous 20 years. So the pandemic just really shook people out of this myopia, I guess, and really went, oh my God, it's really good. And I guess you would find it as well, wouldn't you, Neville? I mean, the idea that, what we're doing right now, we're doing this recording, but we're doing it remotely, is just part of everyday practice now.
Absolutely. If you ask people back in 2018 who had heard of Zoom or WebEx or Microsoft Teams, I'm sure you would have got a blank look from many people. But now they're common terms amongst office workers and everybody else working from home.
Yes, and in fact, Zoom is now a verb. So rather than it being a noun for a company, it's actually, people use it for a verb, which I think sort of grates me a little bit because, you mentioned WebEx. That's actually a Cisco company, but that's been around for over 20 years. And Skype has been around for at least close to 20 years now, and we've been able to use that. But who cares? I mean, my big thing was people started using it. And I think now because it's become so popular, the idea that I can run my businesses and we're doing what we're doing all remotely with the benefit of a good NBN, everyone's now sitting there with very relaxed shoulders and going, okay, that's fine. But look, we're here today to talk about the tax deductibility around the work from home environment. Now, I guess for many people that will apply, but let's just talk very quickly and put this in and out of the way. I operate my own company. So all my expenses I simply write off within the confines of expenses that are expended by my company. So these things in the tax code that we're talking about today really don't apply to small business owners, do they?
They don't apply to the company, but you're an employee of the company, I would imagine. Therefore, they apply to you as to what can you deduct that your company isn't already covering for you. So
Aha.
is
And sorry, but that's the rider. What the company isn't already covering for you.
exactly. You can't double dip. It's
Ah.
it's not an avocado dip. You can't go twice.
Well, you see, I'd written some notes here because what I want to do towards the end of today's discussion is really look at, what are the common misconceptions, and this is obviously one of them where, people that run a small business will claim, if they buy broadband or if they've got a mobile phone, but then to go and write that off against the profits in their small business, but then to then personally claim that on that tax, that would be a double dip, wouldn't it?
Absolutely, yes. And the and as you would be aware, having worked from home for many years, the previous guidance that the ATO had out there, um, there was one method which was a hybrid method, which enabled you to claim 52 cents per hour for what you worked, and that covered the electricity and gas, your home office cleaning, and your depreciation of your office furniture and fittings. But in addition to that, you could claim your internet, mobile, home phone, stationery, consumables separately. So in your case, you're working from home and I'm claiming the 52 cents because my company's not paying my electricity and my gas. But my company is paying for my mobile phone, so that's separate, therefore you don't claim that. The trick comes with the new guidance that was released this month, or last month actually, um, whereby the new guidance includes your energy and as it did before, but now it also includes your internet expenses, your mobile phone, and your stationery and computer consumables. So therefore, if your company is already paying for your mobile phone plan, you can't then turn around and claim that in your own tax return as part of the working from home deduction.
So by grouping some of these expense elements together, they've, I guess, wittingly or unwittingly complicated that code, that element of the tax code. Would that be a fair comment?
There's an argument each way. I mean, you can say that by putting your phone and internet into a per rate method, you've taken out the requirement to allocate between what is private use and what is working from home use. So Are you using the internet because you're working from home, or is the kids are playing video games? Is the electricity because you're working from home, or is it the dishwasher? They've taken all that away and said, here's a cents per hour rate. But the other side of the coin is, well, hang on, I'm on the top phone plan because I make a lot of international calls. And in addition to that, I'm actually required to travel internationally 4 times a year. So I have global roaming. So there is no way that the new rate, which by the way is 67 cents, is going to cover my phone plan, let alone all my other expenses.
Okay. So look, in the briefing notes that you've given me, one of the things that I guess stuck out at me is that taxpayers have to maintain contemporaneous records, and so certainly I'd be very pleased if you could explain to the listeners what a contemporaneous record is.
Certainly, Ray, I'll do my best. Um, I guess the first point to make is that it's not a new requirement. It is a requirement that was there in the shortcut method. And indeed, in the instructions and the guidance the ATO provided for the shortcut method, it talks about that you have to keep a record of the hours you've worked from home. That could be in the form of timesheets, rosters, a diary, or similar documentation. Then they go on to give an example of Ephraim, who's working from home because of COVID. During the entire period he's working from home, Ephraim notes in the calendar on his computer when he starts and finishes each day, along with a note about any breaks he has and how long those breaks were. So there is some confusion out there that I was a 9 to 5 office worker. I've been picked up and put at home because of COVID. So therefore, my deduction would be 52 weeks adjusted for public holidays, annual leave, etc. 5 days a week, 7 hours a day, mathematical calculation, there's my deduction. That's not good enough. You need to be keeping records continuously, contemporaneously about this week, 5 days. Actually, when did I work from home? When did I have to go into the office for a meeting? When did I go to a seminar? When was I sick? And addition to that, if you were working on a large project, for example, which actually went beyond your normal 9 to 5 working hours, what were the additional hours you committed to that you would have stayed in the office for had you been working from the office? So it's about keeping continuous records so that you know and can show actually the hours you did work from home.
Okay, so there's a little bit more to it. So look, it's about time for a break here. We're on Dollars and Making Sense. I'm Ray Treverson, and I'm here with Neville Berthasill from the Institute of Financial Professionals Australia. We're going to go for a short break, and we'll be back in just a moment. Hi, and thank you for listening to Dollars and Making Sense, a weekly radio program about finance, money, and investing on Radio Northern Beaches and nationally on the Community Radio Network around Australia. The views, comments, and opinions aired during our program should not be construed or viewed as financial advice. Any commentary is general advice only and does not take into account your objectives, financial situation, or needs. You should consider whether the advice is suitable for you and your personal circumstances. If in doubt, you should contact an authorised licensed financial planner. We welcome questions and feedback, and you can get in touch with us via our blog, social media channels, or email. Please search for Dollars and Making Sense in your favourite podcast platform or check out our blog at otgcapital.com.au/blog. And welcome back, ladies and gentlemen, to Dollars and Making Sense. I'm Ray Treverson, and at the microphone today, I have Neville Berthasill from the Institute of Financial Professionals Australia, and we are talking tax deductions surrounding working from home. Now, before we went to the break, Neville, we were talking about contemporaneous records. Now, can you explain to the listeners that it's now going to apply not just to certain people, but a whole range of people, aren't they?
Yeah, that's right, Ray. So under the new guidance provided by the tax office, it now applies to everybody. Under the previous guidance, those working from home and using the hybrid method, not the shortcut method, the hybrid method, were entitled to keep a 4-week diary to indicate how much they were working from home and then extrapolate that across the year. That's now been thrown out, and you have to keep your contemporaneous records going forward. And the guidance talks about contemporaneous records as being similar to what the previous guidance was: rosters, logs, time tracking apps, a diary or similar documentation. You can't simply use the logbook that everybody was previously using for many years.
I guess they've really put the onus of proof back on the taxpayer again, rather than being an old army guy, KISS principle, keep it simple, stupid. And so that 4-week logbook being extrapolated, I guess people extrapolated it to the best possible outcome. And I think the tax people have finally said, you know what? No, we want a little bit more detail. Is that a fair assumption?
I think that's part of it, Ray, definitely.
So look, in our notes, I guess one of the things that we like to do here on the show is really perform an education process. And so, given these changes have now been promulgated by the ATO, what do we do? How do we go forward from here?
So if you're previously using the shortcut method, then you need to continue keeping the contemporaneous records that you would have and hopefully were already keeping.
Of course we were, right, Neville? Of course we were.
Absolutely. Certainly all of our members were, no doubt about it. But you also need to consider there are 2 other methods available to you now, or there are 2 methods available to you now because the shortcut method is finished. The 2 methods being the actual expense method, where as the name implies, whatever you incur, you can claim, but you have to apportion those expenses between what is just your running of your personal home and what you're actually incurring as working from home. And therefore, there's a lot more paperwork involved to do the calculations between, as I said earlier, what is the dishwasher and what is actually you working from home, which is incurring electricity costs. Is it the kids playing on the Xbox, or is it you working from home that is costing you on the internet? You have to make all those expense apportionments for all of your expenses. Then you've got the hybrid method. The hybrid method now allows you 67 cents per hour to claim, and that then covers your electricity and gas, your internet, your mobile phone, and your stationery and computer consumables, but doesn't include any of your depreciation costs. So if there's that mahogany desk you always wanted, great, you can now go and buy it. And if it's under $300, which it probably won't be, but then nevertheless, you can claim it outright. Otherwise, you can depreciate it over the life of the desk. So you've got that option now. If we could loosely say the good things about the new guidance the ATO has introduced is it has gone from 52 cents to 67 cents. But if you actually do the inflation calculation, all of Australia is acutely aware of inflation at the moment, you actually find the 52 cents should have probably been around 60 cents already. So it's only really jumped up to 7 cents to 67 cents. The guidance has confirmed that you don't need a dedicated workspace. So if you're working from the kitchen table, that is okay. But the negative things coming out of it are the inclusions of your mobile phone and your internet don't give you any scope if your actual expenses are above what the 67 cents is going to cover. As I said earlier, you can't use a logbook anymore. Now there is a concession there was a concession till the 28th of February. But from the 1st of March, you have to keep contemporaneous records. The ATO allowed you up until the end of February to keep using your logbook. And the record keeping, in addition to keeping your hours, you have to keep one bill to prove you incurred each cost. So you have to keep one electricity bill, you have to keep one
Right.
mobile phone bill. If you go to Officeworks, you've got to keep one bill to show you bought a ream of paper. So there's more record keeping required, and you have to keep the contemporaneous records around your hours.
I guess one of the things that constantly, I guess, gnaws on my brain a bit, Neville, given that I've done, a lot of what you're talking about. So working from home, hopping on a plane, data roaming back in the day when, we didn't have capped mobile plans. And I can remember very clearly some of my colleagues having $2, 3, $4,000 monthly mobile bills when they were hopping to, when I was going through Asia. So I was hopping through Singapore, Hong Kong, Tokyo, and other places. And the roaming charges at that time were extortion. Now, I would say very openly, I never paid that. I mean, I simply put in my expense account back to my company. I was working for Cisco at that time, and they dutifully paid for it. And I guess as part of their ongoing tax commitments, they would then write that off against the profits of the company in the normal course of the tax year. So we're always talking in these circumstances in here is where this is personal expenditure that is being incurred by the taxpayer that's not being reimbursed. That's correct, isn't it?
That's absolutely correct, yes.
So I guess again, I look at this, and when I see some of the hyperbole and vitriol being levelled at the tax office for simply trying to run the country's revenue collection agency, I look at them and go, I don't know what the problem is, or is much ado about nothing here, or am I just seeing it too simplistically?
I guess the issue is for those people who have been relying on the logbook method for years. And this is how much I work from home and are legitimately keeping a logbook. Then suddenly to have to change that. And if you run it to the nth degree, let's say um, you're working from home, so you work up until 4 o'clock, but then you stop and you go and pick up the kids and you get dinner ready and you get them through the bath and into bed. And then so at 9 o'clock you start work again and you work through to 10:30. You've got to record when you started in the morning, when you stopped to pick up the kids, when you started again after they went to bed, when you stopped again. Now, if you have, say, 3 other interruptions during the day, you could be keeping a record which is 6 or 8 entries per day compared to one logbook, which was 4 weeks, and that's it. I'm done for the year.
Yeah, I certainly see the downside of that, and I think, truth be told, I can't imagine too many people would be that meticulous, or am I not necessarily an avid bookkeeper? I mean, I run my calendar for meetings, and even when we scheduled this particular radio interview, we did so electronically. But I don't go in there and go, okay, I'm at my desk right now. Okay, I'm going for a coffee right now. Oh, well, I'm back at my desk again. I don't do that. I mean, is that the expectation really that the tax office is going to see from people going, you know what, to keep Mr. Taxman happy for, what is it, 67 cents an hour? I look at that, and maybe it's worthwhile using this term because it's something I learned at university in the one accounting unit I did, because I eschewed accounting, I have to tell you. Materiality. I mean, is it of material gain that we're doing all this additional burden of tracking and monitoring for what seems like nickel and dime petty cash types of amounts of money? Or am I overglossing this?
Well, I guess if you look at it from the revenue point of view, I think the average claim under the shortcut method was about $1,000. So let's say the ATO targets 10,000 taxpayers who all claimed over $1,000 and dutifully put in their tax return COVID hours rate. So they know who it was, they know that you used the shortcut method, and they know that you claimed over $1,000. And
Hmm?
they ask you to provide your contemporaneous records, which are in accordance with their guidance. And I spoke about the EFRAM example earlier.
Hmm?
And you send in your mathematical calculation, they knock you out and say, no, that's not good enough. and they deny you the deduction, 10,000 people, $1,000 deduction, there's $10 million in revenue they've just recouped. So if by generating an electronic letter that comes out, even if pessimistically it costs them $5 per letter, that's $50,000 to get $10 million. So is it nickels and dimes when you look at it like that?
Neville, that's great context. I got to tell you, I feel like I've been slam dunked, and rightly so. So that's a very good reply. That's a very good reply. So look, in rounding out, we've got a couple of minutes left before we wrap up. What are some of the tax deductible misconceptions that you see in your daily travels that get ensconced in this discussion around work from home? What are things that people are blatantly doing wrong that they really should know better?
I think the biggest misconception is what is included in the fixed rate method and what isn't. And as we discussed before, if you're getting reimbursed by your employer, you can't claim that. If you're using the fixed rate method under the new guidance, you can't claim your mobile phone and your internet separate from that. So those that are working from home and using the ATO guidance need to be across what is included in the fixed rate method and what isn't, and be very clear on that, be very clear on what they're getting reimbursed for by their employer so that they're not double dipping.
And I guess as a final point, where should listeners go to if they want to find out more?
They can go to our website, which is ifpa.com.au. We have a webinar on there that is available on demand on this exact topic. If they can't access it through the webinar, they can give us a call on 03 8851 4555, and we'll be very happy to help them.
And again, I know many people won't have their pen and paper ready to write that, so certainly, look it up on the blogs and use your favourite internet search engine, ifpa.com.au. Always a great resource. Neville, as always, it's a pleasure having you on the show. I know we're going to have you back because there's always great and varied and incredibly interesting things to talk about when it comes to tax. And here on Dollars and Making Sense, it's all about education. Neville Berthasill from IFPA, thank you so kindly for being with us today.
Thanks, Ray.